Look, I think there's actually one principal reason why he was so unhelpful this week in terms of giving us any guidance on where rates are going, and that's because he doesn't know. We are actually at a point where the next decision could go either way, so you can't talk about what you don't know. And there is genuinely a lot of uncertainty, and the fact that we had dissents from his colleagues in both sides, some who didn't want to cut this week, some who wanted to cut more, I think underlines that point. But Dom, I think more broadly speaking, yes, he's probably learned in the last year that efforts to try and elaborate and shed light on what he's planning to do, they can come back and haunt him, because if markets don't like what he says, sometimes it's not taken the right way. Sometimes he has to change his mind because the facts change. And honestly, the less of that guidance you give, the less risk you take in that direction.
I mean, my young Wall Street days, I remember the Greenspan briefcase indicator. I mean, there was a time when people kind of looked towards their own interpretations of the Fed, what it might do, and markets seemed to function okay. Obviously, there were bumps in the road, but is it a situation where the markets are okay with maybe not knowing as much and trying to figure it out on their own?
Well, I think so. I mean, there were special circumstances in the last 5 or 6 years that sort of led to this radical transparency. When the federal funds rate was zero, when the Fed really didn't have many tools to help the economy, talking more explicitly about how they were going to keep rates at zero for a very long time, or only raise them slowly, was one way of keeping long-term rates under control. So in some sense, it was a necessary, adjunct to their policy toolkit. We're not in that situation any longer. There's room to cut rates if they need to. The other thing is that there's been stuff going on in the background. So they now have, as you know, the notorious dot plot. So in the name of transparency, which every central bank seems to believe in, they're telling us what the path is for how officials think policy is going to move in the next year or two. I know there are real mixed feelings within the Fed about that, but it is what it is, and it forces the Fed or Powell basically have some sort of commentary about exactly whether or not he's going to be following that path.
So there's a path, and it might be known, it might not be known. Here's the thing. Over the last maybe 2 weeks, I've heard the two words put together a lot: lost control, in the context of the Fed has lost control of the interest rate market. Is this a situation where you believe that the Fed has lost control of the interest rate market? And if so, is communication the way to solve that?
Not at all. I think there's two separate issues here going on. When people have talked about the Fed losing control, they mean over the supply and demand for cash in the money market, so that the actual interest rate that dealers and others are paying goes to where the Fed is targeting the rate. That's a completely separate issue. The broader issue I think you're talking about is the Fed guiding the overall markets on the appropriate direction for where it wants monetary policy to go. And I think that the Fed in some sense doesn't necessarily want it to tell the market where to go. It actually wants to know what the market thinks. If the Fed talks too much, it ends up just looking in the mirror. It sees what the market thinks the Fed wants to do rather than what the market wants. Stepping back a little bit actually turns the market into a bit more of an independent signal about what it's going to do. And by the way, the fact that we saw bond yields do this gigantic U-turn in the last month with virtually nothing happening in the United States tells you that trying too hard to control where the bond market can go is a fool's game, because you may not fully understand why it's going up or down.